Today, we expose what's happening to an entire generation of British people who were promised a home of their own and are now quietly accepting they will never have one. The data is no longer ambiguous. It is no longer up for debate. Across the United Kingdom, in May 2026, first-time buyers are walking away from the property market in numbers not seen since the early 2000s. And the reasons are so brutal, so structural, and so deliberately ignored by government that the only honest conclusion is this: the British housing ladder has been pulled up. The numbers tell the story before we get to a single anecdote. The average first-time buyer in the UK is now 33.9 years old, pushing toward 35 in London. The average deposit required is £61,090 or £124,688 in London. At current saving rates of 10% of average net pay, about £320 a month, it now takes nearly 6 years for a typical UK buyer to save a 10% deposit and 9 years in London. Mortgage product choice has just contracted by 10% in less than 6 weeks, with the higher loan-to-value deals first-time buyers actually need falling by an even worse 14%. And the Mortgage Advice Bureau's most recent research has confirmed that 41% of aspiring buyers who were ready to buy in 2026 are still waiting, paralysed, watching the market. That paralysis isn't irrational. It's the only sane response to a market that has stopped working for the people it was supposed to serve. The Iran war shattered the cuts narrative. Mortgage rates rocketed from 4.84% on March 1st to a peak of 5.9% on April 7th. Stamp duty relief was gutted in April 2025. The Renters' Rights Act has pushed up rents in exactly the cities where first-time buyers are trying to save. And the bank of mum and dad, the only thing keeping half of all first-time buyers in the game, is itself running out of money. We've spent days digging through Nationwide, Halifax, Barclays, ONS, UK Finance, and Mortgage Advice Bureau data to build the full picture of what's actually happening to first-time buyers in 2026. It's worse than the headlines admit, and the implications for the next decade of British home ownership are catastrophic. But before we get into it, if you're a first-time buyer, if you've been saving for years and wondering if you'll ever get there, or if you're a parent watching your adult children stuck in rented flats they can't escape, hit that subscribe button right now. We're British Front Media, and the property industry has every commercial incentive to keep telling first-time buyers, now is a great time to buy. We have you. Every subscriber, every share, every comment forces the truth higher up the algorithm, so subscribe. Drop a comment with how long you've been trying to buy. Let's expose what's really happening. The deposit catastrophe. Let's start with the brutal first number. The average UK first-time buyer deposit in 2024 was £61,090, with the typical deposit size sitting at 20% of the purchase price. In London, that figure jumps to £124,688, more than 4 times the annual median UK salary. Even in England as a whole, UK finance data shows the average first-time buyer deposit is £63,855 for someone earning the median UK wage and saving 10% of their net pay each month. Accumulating that 10% deposit takes almost 6 years across the UK, 4 years in the north, and 9 years in London. Nationwide senior economist Andrew Harvey put it bluntly: the fact that a typical first-time buyer still needs close to 6 years to save for a 10% deposit shows just how significant the deposit barrier remains, especially in London and the south of England. 6 years of saving, and that's just to reach 10%. The average buyer is putting down 20%, which doubles the weight. The bank of mum and dad reality. Half of first-time buyers in the UK now rely on family help to buy a home. Savills data confirms 52% of first-time buyers get help from their parents. Other estimates run higher. The implication is staggering. In modern Britain, your ability to own a home is determined less by your income and more by your parents' wealth. The Mortgage Advice Bureau confirms the average age of a first-time buyer is now 34, reflecting how many years of saving and family support it now takes to get on the ladder. That's not a market. That's an inheritance economy dressed up as a housing system. The deposit shrinkage trick. To paper over the crisis, lenders have started offering lower deposit products. Barclays' data shows 22% of first-time buyers now put down deposits of less than £20,000, up from 13% the previous year, and 44% are now opting for 85 to 90% loan-to-value mortgages. On the surface, that sounds like access is improving. In reality, it means first-time buyers are taking on bigger mortgages at higher interest rates with less equity buffer in a falling price Southern England market. One Westminster flat that fell 13% in a year would have wiped out a 10% deposit overnight. The Iran-era mortgage rate environment turns every one of those 90% LTV deals into a debt trap. The mortgage product collapse. In March 2026 alone, 1,283 mortgage products were pulled from the UK market as lenders panicked over the Iran war and the inflation outlook. Around half of those withdrawals have been reversed, but mortgage choice has still contracted by 10% in under 6 weeks, and the high LTV deals that first-time buyers actually need have fallen by 14%. So the very products designed to let young people buy with small deposits are disappearing exactly when the demand for them is highest. Money Facts confirms the average 2-year fixed rate climbed from 4.84% on March 1st to 5.9% on April 7th, where it has barely retreated. For a first-time buyer with a £200,000 mortgage, that's an extra £1,500 a year in interest. Money that has to come from somewhere, the stamp duty betrayal. And then came the policy decision that broke the back of an already bruised generation. As of April 1st, 2025, the previous government's first-time buyer stamp duty relief was gutted. The nil rate threshold dropped from £425,000 down to £300,000, and the upper relief threshold dropped from £625,000 to £500,000. The result? A first-time buyer purchasing at £400,000, a perfectly normal price in most of southern England, went from paying £0 in stamp duty to paying £5,000 overnight. That £5,000 has to come from the buyer's savings, on top of the deposit, on top of legal fees, on top of survey costs, on top of mortgage product fees. For a generation already 6 years behind, that's another 6 months wiped out. The paralysis statistic. Here is the single most telling number in this entire crisis. The Mortgage Advice Bureau's April 2026 research found that while 52% of prospective buyers say they're ready to buy in 2026, 41% of them are still waiting for a sign before taking the plunge. They have the deposit, they have the income, they have the credit score, and they still won't pull the trigger because they no longer trust the market, they no longer trust the government, they no longer trust the bank, they no longer trust the estate agents. And given everything we have just listed, who can blame them? The transaction collapse. The behavioural data confirms the paralysis. UK residential sales were down 6.7% year-to-date in early 2026 compared with 2025, with exchanges down 13% year-on-year. HMRC data shows 102,410 transactions in February 2026, down 6% from 2025. Sellers are pulling out too. Property Wire's latest analysis revealed that 47% of homes that left estate agents' books in March were withdrawn unsold rather than sold to a buyer, and 44% of all properties listed for sale between 2023 and 2026 failed to find a buyer. Of the homes that did sell, 53% required price reductions, with the average completed sale 3.5% below initial asking price, £18,800 less than the original listing. The market has frozen, and the people who need it to work are the ones doing the freezing. The Gen Z reality. And here's the bleakest data point. Barclays research shows the average Gen Z saver in the UK has accumulated £19,442 toward a deposit, compared to £25,760 across all prospective buyers. Their expectation for 2026 is to add another £8,998. That means a typical Gen Z first-time buyer will end this year with roughly £28,000, less than half of the average UK first-time deposit, and barely a fifth of what's needed in London. Their hope is the high LTV products, the family support, and the government schemes. All three of those props are weakening at exactly the moment they're needed most. Why this is structural, not cyclical. This is the part nobody in government wants to admit. The first-time buyer crisis is not a temporary blip caused by the Iran war or sticky inflation. It is the inevitable result of 3 decades of policy failure. Planning rules that have crushed housing supply, quantitative easing that has inflated asset prices, tax preferences for landlords that have crowded out owner-occupiers, immigration without matching housing delivery, and a regulatory regime that punishes the small landlords who used to provide entry-level rental stock while doing nothing to actually build affordable starter homes. Even the most optimistic 2026 forecasts now sit at just 1.5% to 2% house price growth for the entire year, which means first-time buyers face flat to falling values, rising rates, and falling product choice all simultaneously. What this means for you. 3 pieces of practical advice for anyone currently saving for a first home. First, use every tax advantage scheme you qualify for. The Lifetime ISA still allows you to save £4,000 a year with a 25% government bonus of up to £1,000. Over 6 years of saving, that's £6,000 of free money you cannot afford to leave on the table. But remember the £450,000 property cap and the 25% withdrawal penalty if you don't use it for a first home. Second, look hard at Northern England. The deposit gap between London and the north is now so extreme that Burnley is the most affordable place for first-time buyers in England, and Inverclyde in Scotland is the most affordable in the UK. And northern markets are actually rising while the south falls. Third, if you're in the waiting for a sign 41%, recognise that no sign is coming. The market is not going to suddenly become easy. The choice is to act with the leverage you have right now. Falling southern prices, 10 to 12% off asking in some suburbs, motivated sellers, or wait indefinitely for a market that has already moved on without you. The brutal truth nobody in government will say out loud is this: British home ownership has been quietly converted from an income-based system to an inheritance-based system. If your parents own property, you have a path. If they don't, you have a problem. That isn't a market failure, that's a deliberate political choice. And it will not change until enough people stop accepting it as normal. If this video opened your eyes to what's really happening to first-time buyers in Britain, hit that subscribe button one more time. Drop a comment with how long you've been saving and what's stopping you from buying. And subscribe to British Front Media because we're doing this every single week. New investigation, new expose, new truth the property industry doesn't want you to hear. Until next time, read the data, question the headlines, and protect your home.